Hello, everyone, and welcome. Happy Thursday. Happy Thursday. Happy Thursday. So, today I am going live in both the Facebook group and also on LinkedIn. Come on in. As you come in, say hello. Let me know that you are here. And we are going to be talking about how to get started with tax planning. Now, I am really excited to share just a little bit about this topic, and I hope that you will join in the conversation. So, I want to hear what questions you have about getting started. Is this what you thought it looked like to get started with tax planning? Because I can almost promise you it's not what you think it is to get started with tax planning. So, hi, I'm Shanta Thomas. I am with Thomas Tax Services. And not only do I do tax planning services for businesses and individuals, but I also bring education to professionals in the industry who want to get started with tax planning services. So today I want to talk to you all about how to get started with tax planning. And I want to come from an angle that you are probably thinking, what does that got to do with tax planning? Because I've never really thought about that when it comes to tax planning. And that is bookkeeping. So as you come in, say hello, let me know where you're from. And we're going to be talking about, well, something that you probably didn't think we needed to talk about, which is bookkeeping. Bookkeeping is the foundation of any business. So we're going to talk about tax planning from a business perspective and how do we get started with tax planning in your business. And for those of you who are professionals who are doing this for others, how do you get started with tax planning for your clients in their business? All right. So I got some hellos. We got Houston, Texas on here. We got some others on here. I'm saying hello to all of you. If you're watching this on the replay, say replay. So if we're talking about tax planning and getting started, believe it or not, the very first thing that you need to make sure that you're doing in your business is your bookkeeping. Not only do you need to make sure that the bookkeeping is done, but you need to make sure that it's done by a professional. Somebody say professional in the comments. It has to be done by a professional. Now, why is this important? Why is this key? And for those of you who are professionals who work with other clients, why is this important to make sure that your clients are working with professionals? It's because if they don't know how to do bookkeeping, if they have never done bookkeeping before, or if you have never done bookkeeping before, you shouldn't be doing the bookkeeping for your clients, or you never learned how to do it or went through training on how to do it. Why? Bookkeeping is the foundation. Somebody say foundation. Bookkeeping is the foundation of any business. The foundation. That means you cannot make key decisions without good bookkeeping. If you do bookkeeping, or if you don't do bookkeeping, and then you do your tax prep is likely to be incorrect. Foundation got to build a sturdy house. Yes, exactly. That is one of my examples I always use. Yes. So without bookkeeping, you can't make key decisions in your business. Without bookkeeping, you can't go and do tax prep and the tax prep be accurate. Without good bookkeeping, you can't do a tax plan because the tax plan is going to look at the bookkeeping. But let me give you an example. So let's say that you have a business, and in your business, you let's say your business is construction, because I've been working with some construction companies lately. So let's say it's construction. And in your construction company, you purchase some sort of vehicle or asset for the company that you need in order to perform your work. That asset that is in the company cannot be expensed the same way this pen can. The asset can be expensed, but it has to be expensed in a very different way. In addition to that, there is depreciation that you can take on it. Thank you. You beat me to it. Depreciation that you can take on it. And that depreciation can actually be maximized in some of the beginning years. But if you didn't do your books properly and it was just written off as an expense, we can't capitalize on a depreciation, because guess what? Your preparer may not even know that's what you did. They may not even know because they're following what you did in your work. The purpose of preparation, and those of us who are preparers, the purpose of the preparation is not to audit the work. So if someone puts something on there as a line item and the item makes sense, we're not going to go question and dig through and make, for some things, if things start to glare out and we're seeing red flags, a lot of times we will reach out and say, hey, some of this doesn't make sense. Let's look at this again. Or maybe I'm not going to do this return. I'm not trusting some of the numbers, right? But that's not our job. Our job is to make sure that the information that we receive is put on the return in compliance. It's put on there accurately. So the key is making sure the information that's received to go on the return is correct. And us as planners, what we do is we take the information from the return, and that's what we use for the plan. So if you haven't seen what I'm saying, it starts with the bookkeeping, it goes to the tax prep, it goes to the tax plan. So if the bookkeeping is wrong, guess what else is wrong? Anybody, somebody in the comments, what else is wrong if the bookkeeping is wrong? The tax prep, correct. What else is wrong if the bookkeeping is wrong? The tax planning, correct. What else is wrong? If you decide to go get a loan, your income could be overstated. If you decide to go get a loan, your expenses could be understated. And the bigger thing is, if you have all of these errors, the IRS, the state, they may recognize these things. And guess what they're going to do? They are going to audit you. So the things that you thought that you could write off in terms of tax planning will actually get added back, plus penalty and interest. So not only will you not save money in the way that you thought you were going to save money, but you are also now going to put yourself in a position where you got to pay extra money because you made some mistakes. So the key to any phenomenal tax plan is really good bookkeeping. And if you are not a bookkeeper by trade, if you are not a bookkeeper and haven't learned that skill, if you are, and I'm not saying go to school, right? So for those of us who are professionals that are watching this, I'm not saying you have to go to school and going to school is the only way to be a professional bookkeeper. Absolutely not, right? I'm not going to say that because that's not the case. You could be a phenomenal bookkeeper and never have gone to school for bookkeeping. I know a lot of people who are really great bookkeepers, they haven't gone to school for accounting services and they weren't formally trained to be a bookkeeper. Well, there's nothing wrong with that. So don't put yourself down if you fall into that category. That's the first thing I would say, because that's not the case, right? I am not a bookkeeper by trade. Honey, I can tell you what it's supposed to look like. I can look at it. I'm a former CFO. I understand bookkeeping. I get it. I went to school for accounting, right? So I understand what the books are supposed to look like. I get all of that stuff, but that's not what I do. That's not my day to day. So you don't ask me too many technical questions, honey, because that's not, y'all understand what I'm saying? That's not my jam. My jam is tax strategy. Now, you ask me some questions about some tax strategy and some stuff you can do, and listen, I got you all day. But if you ask me some stuff about bookkeeping, I know many people who have not gone to school who know more about bookkeeping than I know. Now, I do, like I said, I do know a lot because as a former CFO, and I still use a lot of my CFO services in tax planning. So as a former CFO, there are a lot of things that I do which could fall into the bookkeeping realm, because into the CFO realm, including looking at people's books, because it's one of the things that if I'm have some questions in the taxes, I'm going to go and look at the books. And if I'm seeing too many red flags, I'm going to back away. I'm not going to do your plan. And some people really hate that I will back away and not do their tax plan because they feel like they're ready. But listen, my job is to protect you. My job is to protect you. And so if I feel that I am going to put you at risk by doing a tax plan for you, and you haven't mastered some of the basic things, such as bookkeeping and bringing on a professional bookkeeper, such as tax prep and bringing on a professional tax preparer, then I'm not going to put you in that type of risk by putting you in a tax plan. I want to protect you. So I want to make sure you're good. And the way I'm going to do that is by taking the necessary steps. You can't go from bookkeeping and just be like, I'm ready for the plan. You're not. And if you're a professional, you have clients who are saying that, they're not. It is a ladder, or think about it as a ladder. If they come in and they get the bookkeeping, they're like, hey, I'm ready to make sure I've been doing my own bookkeeping, but I'm ready to stop doing my own bookkeeping. I want to bring on somebody. Okay, now they've achieved that. So the next thing is, hey, I'm ready to bring on a professional tax preparer. Great. So now they've done that. Then you're ready to have that conversation. Tax planning is a premium service that not everyone is entitled to. It is something that they can do. It's much more expensive than tax preparation. And the way that we get to the tax planning is when people are ready to invest in themselves. And this is key, because if they are not ready to invest in themselves by paying someone to do the tax plan, then they're not going to be ready to invest in themselves by actually implementing a tax plan. And believe it or not, for most tax plans, that requires an outlay of money. Someone say you need capital. Someone say capital in the comments. You need capital. So let me give you an example. Let's say you want to hire your children. And let's say you have $13,000 of expenses. You say, hey, I want to hire my child. I'm going to do about $13,000 this year. I want them to work this many hours and make this much money. And then I want to take some of that money. I'm going to put it in an IRA, blah, 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 blah. So let's say that you say, I want to put that in place. Well, guess what? To put it in place, there are specific things that you got to make sure are in place. One of the things that you got to make sure is in place is you have to have the money in the business to actually pay the child. That those funds have to actually leave your business and go into an account for the child. And there's a specific process that you need to follow, and they should not be getting a 1099 ever. So there are costs that are going to be associated with hiring the child. You have to actually pay that child. There are many things you're going to have to do. You have to put them on payroll, right? I said you can't give them 1099. So what do you give them? You're going to actually give them payroll. So you got to make sure the payroll is in place. So now you're paying for a payroll platform, right? You got to make sure that's done on a specific time period. So you're looking at extra costs. Depending on the state, whether or not you can get around the workers' compensation, there are different ways that you can do that depending on the state. You might have to pay workers' comp. And when I was looking at workers' comp for my kids, it was $1,000 per child. I wasn't even paying them $1,000 each per year. But workers' comp was over $1,000. And I had to have workers' comp because I wasn't structured. I wasn't set up in the way that I needed to be set up in the state of New Jersey to not have to pay workers' comp. But there are ways around this. So this is why you work with tax planners. I consider myself a tax strategist. But this is why you work with people like myself, because we come in and we help you. We give you the information. We guide you so that you can then put these things in place and you can breathe easy at night because you don't have to worry about putting them in place but the IRS is coming back after you because you have done the work to put these things in place. But if you're not willing to do the little things, you're not ready to do the bigger things. And so if you have clients, for those of you who are watching who are professionals, if you have clients that are coming in to you to do the little things and they want to skip on the little things, they're not ready to do the bigger things. And if you're somebody who's like, I don't have a lot of money, like I really want to figure out how I can pay less in taxes because I really don't have all the money to begin with. And so if I could just figure out how to get an extra $10,000 that I don't have to send to the IRS, that's going to give me extra money. You're not ready for tax planning. Because tax planning is all about investing in you. It's more akin to CFO services than it is to tax prep services. And it's more expensive. And so if you aren't ready to make an investment in yourself, you're not ready. And there's nothing wrong with that. Everyone's not ready. We don't all get ready at the same time. Some people is never going to be ready. Because if you're not ready to invest in you, you're not ready to do it. It's not about saving. It's not just about saving you money. It's about helping you to save money by investing in yourself and investing in things that maybe you wanted or needed all along, but weren't getting any sort of benefit from it. And part of tax planning is what we call accounting optimization, which is another word for maximizing your accounting to make sure that you can save the most on your taxes. I always give this example. What did you purchase on January 10th of this year? Nobody knows what they purchased just off the top of their head, unless there was like a big event around it or something like that. Most of us don't know what we purchased on January 10th. But guess what can tell you exactly what you purchased on January 10th? A good set of books. It'll tell you what you purchased, where you purchased it, how much it was. It's going to jog your memory. So that in itself, if you miss out on key things like that, guess what happens? You end up spending a lot more money on your taxes than you need to. So maybe you should have only paid taxes off of $50,000 of income this year, but maybe you're about to pay taxes off of $200,000 of income this year because you forgot to include some very key expenses. This happens all of the time. It's known as accounting optimization in the tax planning world. And essentially, it's making sure that we are doing what we need to do in your books. We're making sure you're in compliance. We're looking at all of your taxes. We're making sure we're doing the quarterly tax payments. We're doing all the things to make sure that you are saving on your taxes by just making sure the accounting is correct. It all adds up to big savings in your business. So, my key for today, my key takeaway is if you want to get started with tax planning and you want that service, make sure you have this in place. And I have told clients before that they're not ready for tax planning. We got to get this in place first. For me, it's an ethical thing. If you're not there, you're not there. That's okay. Everyone's not there at the same time. But let's get you into compliance. It has taken me, in some cases, 2 years to get people in place, or a year and a half to get people in place for them to get ready for tax planning. So if that's you, I can help you, but it is going to require you getting in place. And for all the professionals out there listening, if you have clients who are saying they're ready for tax planning, well, here's the reality. If they haven't actually done the bookkeeping and they're not willing to spend the money on a professional bookkeeper for $200 a month or $500 a month, they are not going to be ready for your tax plan bill when you give it to them, nor are they going to be ready to implement the pieces of the plan that you're going to recommend. So don't even waste your time. If I have somebody who's not willing, either you don't have and you're not willing to bring on a professional bookkeeper to do your books, I'm not going to let you waste my time and I'm not going to waste your time. Tax planning is just not for you right now. But once you get it together, I'm more than happy to service you. And if you need a referral, I got you there too. I don't do the bookkeeping, but I got some referrals for you. So there are lots of ways that you can actually get started with tax planning. This is one of the key ones. Next week, I'm going to be back and I'm going to talk about the next thing that you need to get started with tax planning. We have some what we call the 3 absolutes. And the very first one is you must, and I do repeat, must be working with a professional tax bookkeeper. Excuse me. You must be working with a professional bookkeeper in order for us to consider taking you on as a client for tax planning services. And every professional that's listening out here who's a tax professional, I hope that you have the same guidelines in your company too. So if you have any questions, drop them in the comments. I'm going to see you all next week, unless I see a question come up. But if you have any questions, drop them in the comments. I will be happy to answer those. And for those of you who are watching this on a replay, don't forget to tell me that you are here on the replay. And don't forget to drop your comments or questions too. I'll be sure to answer them at a later time. But don't miss next week, where we're going to be talking about the second thing that is crucial if you are looking at getting into tax planning in your business or for you individually, what you're going to need. And the next one's going to cover both professionals, businesses, and individuals who only have wages The number 2 thing that you need to make sure is in place before you even begin this discussion of tax planning. You don't want to miss it. All right. Again, I'm signing off. I'm Shanta Thomas of Thomas Tax Services. And you can find me at www.shantathomas.com for tax professionals who are interested in learning more about our tax planning services. You can click the link that I'm going to share in just a few minutes on Facebook and on LinkedIn. But you can also find me on www.shantathomas.com. And on there, you will see information for education for tax professionals. And in that information, what we do is we share how you can start working with us so that you can learn how to do tax planning too. All right, that's all I have for y'all today, and I will see you next week. Those of you who are in our advisory program, we have a meeting at 1:00 where we have someone coming to talk to us about key man insurance. Make sure you're there. All right, I'll see you all later. Have an amazing